see here. So remember last time, this must be the question and answer one, and this must be my presentation. But now everything is on this. Yes, so how did we do it again? I remember not duplicate, extend. I remember, oh, it's extend, not duplicate. Okay. So this one will be my presentation, and this one will be the question and answers here. Yes. Mine is mine, yes, my masterclass here. This is going to be on my laptop. And then the questions that the student's going to ask me, I want to see. Yes. That is that's my presentation, yes. You did move it for me the last time. Okay. So I'll see the questions here and my presentation here. Okay. Perfect. Thank you. Good morning, Bev. Um, good morning, everyone. Bev, are you able to hear me? Good morning. Hello, good morning, Bev. Are you able to hear me? And the others that have joined, Kabanku and Lesehu, are you able to hear me?
Yes, ma'am.
Okay,
Yes, ma'am.
wonderful. Okay, thank you. I'm just waiting for. Are you able to see the screen that I'm sharing? My,
Yes.
okay, and I'm not sure if you've seen that I've shared a register on the question and answer. Are you able to see that? The link to complete the register?
Yes, ma'am.
Okay, perfect. Thank you. Just see if you are able to access that for me. We will be starting shortly. We'll just give some time for more students to attend, and then we will commence for the latest at 9:05. Okay, thank you, everyone. Thanks. Lesejo and Cabanjo. Um, Hi, good morning, everyone. I see we have quite a few more that have joined us. Beverly, are you able to hear me? Beverly? We'll give a few minutes before we commence. I'm going to just share the register link again. If you could just please sign that for me. Okay, we'll just give a few minutes more. I see there's a few more joining us, and then we'll start our session. Leon, good morning, Leon. Thank you for joining. Can you unmute your mic? Beverly, good morning. Are you able to hear me? Can you maybe unmute? Good morning. Thank you for those that have joined. Um, if you could please just send me a thumbs up if you are able to see the slide that I'm sharing, and also if you have, thank you so much. Thank you. Welcome, welcome everyone. And also the attendance register. Have you been able to access the link and insert your name and from which campus you are? I'll just post the link again. All good. Thank you. Thank you. Okay, it's 9:05 now. Thank you everyone for those that have made the time to join our session today. We are up and running. I see that we are recording the session. Just maybe before I actually start, I'd like to just welcome you to today's session. My name is Salama Parker, and I also have Beverly Orenston that will be assisting me with all your questions. Please um, please just post your questions in the chat. If you want myself and Beverly to assist you with additional questions or with what I'm sharing on my slide today, and we're going to continue now. So please welcome. Have your pen and paper ready for some notes. I'm sure you need to take down some notes. You're preparing for your upcoming exam on Friday. You have your textbook, you have your calculator, and looking forward to a very engaging session while we're going to be revising Learning Unit 1 to 6 this morning. Just a reminder, I'm sure your lecturer has mentioned this in class on numerous times, that your exam contributes 35% towards your final module mark. For this exam, the total mark of your exam paper will be 100. 2 hours. Please take note, it's a closed book exam and you must have a calculator when you're coming to write your exam on Friday, and also that the exam will cover all the learning units in your textbook. Okay. Everybody happy? Everybody still able to hear me? And please, if for whatever reason you are not able to hear me, then please just post a message in the chat, okay? Or you can raise your hand and then I can assist you as we proceed. Wonderful. Again, some important reminders for the exam. It's very important that you come into the exam prepared on the day. So please remember to read the instructions carefully on your exam question paper. Answer all the questions in your answer book. Please, you will have enough time to complete the exam, so please do not leave any questions out. So we don't want to see any blank questions. So please answer all your questions in your answer book. Round off to the nearest rand or two decimals as instructed on the question paper. Show all your workings on your answer sheets and write in black or blue a pen on your answer sheets. Please, no pencil, and just breathe in and remain calm at all times. You got this. If you've prepared, if you've studied, if you revise, everything will go well on Friday. Any questions? Can we proceed? Okay. Just another reminder that if for while you are revising this coming week for your upcoming exam on Friday and you still want to practice some activities or just need to um, revise something that you're still not unsure about, then please do make use of Finn, our chatbot. Your lecturers have shared this link as an announcement on ARC, so please do make use of Finn. Then also a summary sheet has been shared earlier in the year with your lecturers also. It's like a cheat sheet, just looking at the most important content covered in Learning Unit 1 to 6. Please also have this handy with you while you're preparing for your upcoming exam on Friday. Then these are the learning units that we will be covering now, or which will be in your upcoming exam. You have 6 learning units. If you can just have a look at it, an introduction to business bookkeeping and accounting, the accounting equation and the double entry system, that is learning unit 2. Learning unit 3, your value added tax and your source documents. Learning unit 4, recording cash transactions. But also please to note that when you did your first test, that covered learning unit 1 and 2. Test 2 focused on learning unit 3 and 4. And now your exam will cover all the learning units, but more specifically, I would like to focus on learning unit 5 and 6, since that will definitely be assessed in your exams. But I will be revising the previous learning units, but not so much in detail as when I did the masterclass for test 1 and test 2. So please do also, when you are preparing for your exam on Friday, to please also work through that recordings for test 1 and test 2. So what type of questions can you expect in your upcoming exam? Again, there will be theory types of questions, and we do get different types of theory questions. We have true and false, missing words, or choosing the correct words, or matching the columns, definitions. So please, again, revise the questions in your textbook, especially for Learning Unit 1, which was a lots of theory. So work through that, work through the multiple choice questions in your iStars, and more importantly, the past tests and exam papers on ARC, or what your lecturers did in class with you during preparing you for the exam when they were doing revision in class. Then we have some practical questions. Our practical questions are all the different calculations, your VAT calculations, your markup calculations from a Learning Unit 2. And then we moved on to our subsidiary journals for Learning Unit 4, and then Learning Unit 5 and Learning Unit 6. And then, of course, our general ledger and trial balance. So you must be able to do practical type of questions also. Okay, and now we're going to any questions? Everybody still with me? Troy, were you able to access the register now? I just shared it on the chat group. And for those that joined late, were you able to sign the register for me? Perfect. Thank you so much. So we'll continue now to the next slide. We have a lot of work ahead of us, guys, so please do bear with me. We will take a 5 to 10 minute break just to give you time to stretch your legs, to grab a cup of coffee or something to drink, and then we'll proceed. And like you know, again, I've just shared all the learning units that we need to cover, so I really need you to just bear with me as we go along. Okay, so just to um, get you going this morning. We're going to do a short little quiz just to see if you still remember what your lecturers did with you in class. Um, okay, I'm so sorry. I'm so sorry. Um, okay, I was not aware of the MSA. Thank you so much. I will, not to worry. It does, the teams will also record all the students that have joined in today's session. Okay. Right, so here's some short questions. Okay, true or false. I'll give you a few minutes to see if you could indicate if the following are true or false. And then you can put your answers, you can post your answers for me in the question and answer or chat group. That's where you can post your answers for me. Are you all ready to give me your answers? Or are you still busy? Do you need some more time? So who's got the first answer for me? Capital drawings and stationery. Is that proprietary accounts? Do you need some more time, guys? Post your answers. These are just some of the questions that you will. Okay. Is your first answer true? Okay, let's see. Okay, Serena. Okay, what you should note here is that's why you must read the questions very carefully. Capital and drawings, they are proprietary accounts, but we tried to trick you here and we've included stationery. So the minute you saw stationery, then you should know that it's not proprietary account. Stationery is an expense, okay? So very important to read the question very, very carefully in accounting. So just to note that in the exams. Okay, so the first answer is false. Returns to suppliers is recorded in the creditors allowances journal. That is true. Is creditors control an expense? That answer is false. Who can tell me what element is creditors control? If it's not an expense, what will we classify creditors control as? Who's got an answer for me there? A liability. Well done. Thank you, everyone. Thank you, Madeleine. That's right. And more specifically, when you say liability, you have to also say whether it's non-current or current. And in this case, creditors control is a current liability. Okay. The general ledger summarizes the journals on a monthly basis. That is true. And net profit equals sales minus cost of sales. That is false. Sales minus cost of sales will give us what profit? Who can tell me? If you take your sales minus your cost of sales, you are calculating your which profit are you calculating here? Gross. Well done. Gross profit. Thank you, Madeleine. That's correct. Your gross profit is your sales minus your cost of sales, and your net profit equals your total income minus your total expenses. So now let's get started to revise Learning Unit 6. Learning Unit 6 is based on your inventory systems. Okay, and you know that there are two inventory systems. Do you still remember what are the two inventory systems that the business has an option to decide on to use in their business? What are those two inventory systems? Anybody got an answer for me? Perpetual and periodic. Well done. Thank you, Ms. Okazi. So Learning Unit 6 focuses more specifically on the periodic inventory system. Okay. In the previous learning units, Learning Unit 4, 5, Learning Unit 2, we looked at the perpetual inventory system, but in Learning Unit 6, our focus is on the periodic a perpetual inventory system, and these are our learning objectives. Very importantly to note is that we need to also be able to answer some theory questions, explain why some businesses choose to use a perpetual inventory system but a periodic in system instead. So we're going to be looking at the advantages and disadvantages of the different inventory systems. You must be able to know how to calculate cost of sales using a periodic inventory system. You know that in learning unit 2, you were introduced to the main differences between perpetual and periodic, and you know that with the periodic inventory system, cost of sales is only calculated at the end of the financial year, and there's a specific formula that you need to use in order to calculate your cost of sales. Okay, so again, we will be looking at demonstrate the purchases, returns. These are the demonstrate the workings of carriage on purchases and similar accounts. Then you must be able to analyze inventory related transactions under the accounting equation, be able to record these inventory related transactions in the subsidiary journals, and explain also which one of the two inventory systems is most desirable in the world in which we live. Okay, so again, these are your learning objectives for learning unit 6. So more importantly, I need you to really study these. What are the advantages between perpetual and periodic? With a perpetual, cost of sales is calculated after every sales transaction because that business has a computerized package which is used at the point of sale. The gross margin and inventory balances are readily available. Um, the computerized system allows management to reorder inventory where stocks are running low. What is the advantage of the periodic? It's suitable for small to medium-owned businesses that has a daily personal oversight or control over their inventory. It's less costly as a computerized system is not required and suitable for a business that does not have a computerized accounting package. Okay, so that is your advantages. And please remember, instead of us saying advantages, we could also say what are the benefits of a perpetual or periodic inventory system. Then what are your disadvantages? With a perpetual, we require a computerized accounting environment at the point of sale. Small loosely sold items like sweets will still have to be counted manually, right? Although technically a stock take is not required, differences always occur as data capturing is not always accurate. Right. And then for periodic, it's impractical in the non-computerized accounting environment. Stock count is always required at year end, which is time consuming and which means the business needs to close while count is occurring. Okay, so these are your disadvantages. Any questions? Anything? Everybody still with me? Perfect. Thank you. Thank you. All right. So now when we calculating the cost of inventory, okay, we need to take certain things into account. Please do practice the 2024 past exam paper where this formula was used, where you will take your normal purchase price less your trade discount. That will equal your net purchases, and then you will add your transport costs, your transport inwards, your import duties, and your insurance costs, and that will be your total cost of your inventory. Please take note that we do not include storage costs when we calculate our cost of inventory. So if they give you the storage costs, please do not add it. It does not mean that if they give you um, specific amounts that you need to use all of them. Okay, so this is where we will be testing you to see your understanding and for you to be able to know that when I'm calculating the cost of my inventory, I should not include the storage costs. I can include insurance, yes, but not storage costs. Okay, so please just take note of this. And again, it's in your textbooks, okay, on page 174 in your textbooks. And I'm sure your lecturer went through the example with you in class also on page 74. And then on page 176, this is how we will calculate cost of sales for a business using the periodic inventory system. Again, please, I need you to study this formula. Okay, we take the opening inventory, we add our purchases, and purchases, do businesses only purchase inventory for cash? Who can tell me? What are the two different ways a business will purchase inventory for their business? Do you still remember? What are the two methods of purchasing inventory? If you're not purchasing for cash, if you're not purchasing for cash, you will be purchasing from your supplier on, who can tell me what is that word? Either cash or credit. Credit. Very good. Very good. Okay, so please remember that a business can purchase on credit from the supplier or on or for cash. So those are the two purchases that you can make. And if you're returning the goods back to your supplier, it will decrease the value of your purchases or your inventory, and then your transport costs, again, carriage, railage, freight, they all mean the same. And then any other additional costs with regard to how you're going to get your inventory to your location. Okay, and then you minus the closing inventory. Now, very important, I know students always tend to mix these two amounts up. Always remember that the opening inventory will be the inventory at the beginning. So your date will always be the first and the closing inventory will be the end. Will either be 31 or 30, or depending on the month. 1st of January, 31st of January, or 31st December. Are you with me? So always just be guided by the dates also. And the opening inventory will be at the beginning and the closing inventory is at the end, and we subtract the closing inventory, and that will then give us our cost of sales. Everybody happy with that? So that is our formula. The opening inventory plus the total purchases less any returns plus carriage on purchases plus import tariffs plus custom duties minus the closing inventory, and that will equal your cost of sales. So let's have a look at a little activity to see if you are able to do that calculation now. I'm hoping, do you want me just to for you to take a pic of the calculation or the formula, sorry, before you do your calculation, if you could just please, or if you can just go to page 176 in your textbooks, then you have the formula there for you to answer the question that I will be sharing now. Okay, before I actually get to the question, this activity in your textbook also very, very important on page 175. What impacts the cost of your trading inventory, please remember also that it will be your transporting costs, okay? So that answer is yes, the wage of workers who assemble the parts of a vehicle at a vehicle manufacturer or any manufacturing business. So those workers' wages will affect the cost of inventory, but the fuel for the motorcycle, for any deliveries, salaries of sales staff, salaries of office staff, does not impact your cost of trading inventory. The cost of storing, no, but import tariffs, yes. Okay, so just please remember these are the items that will be included in the cost of trading inventory. So here's our activity. So please see what I've shared with you. I want you to use the information given below to calculate cost of sales. I've given you the opening inventory, the cash purchases, the credit purchases, the returns, and carriage on purchases and import duties, and your closing inventory. And I want you to calculate cost of sales. I'll give you a few minutes and you can do your calculation for me. Please go to page 176 for the formula. Are you still busy? Who's going to share the answers for me? Okay, with the opening inventory, okay, where are we going to put that amount? Okay, thank you, Tegan. I've got an answer there from Tegan. Okay, well done, well done. Okay, so opening inventory, will that be at the beginning? What am I going to do with our cash and credit? Well done, Tegan. Good. The answer is correct. Please, please, if you can see also that when you're showing your calculations, it's very important that you need to show us when you are adding and subtracting. Okay, everybody happy with that answer? So it's your opening inventory plus your cash purchases plus your credit purchases minus your returns plus your carriage on purchases plus your import duties minus your closing inventory. Okay, if you don't show the minus, you can put the amount in brackets so your lecturer can clearly see that you are subtracting that amount. So cost of sales equals 89,000. Well done. Well done, everybody. I'm sure there were many of you also that got that answer correct. So please remember to show your pluses and your minuses so we as lecturers know that you are adding or subtracting. Any questions? Can we proceed? Everybody still able to hear me? Perfect. Thank you. Thank you, Bev. Oh, welcome, Bev. Thank you. Um, Bev, anything you'd like to share with the students before I proceed?
No, can you hear me by the way? I was
Yes,
having
yes,
issues a
I
bit
can.
earlier. Yeah.
Not a
Um, yeah, no, it's fine. It's also just to remember, I think if they ask you, for example, we've got this formula, if they ask you to say to calculate purchases, that you can actually remember the formula, but also solve for any other missing amount within the formula. So yes, you might get asked to calculate cost of sales, but remember it could be used to calculate closing inventory if you are given the cost of sales and all the other information. So just remember, learn the formula well, so that you can actually use it where necessary. That's the only thing I've got.
thank you, Bev. Thank you. Okay. Then regarding the accounting equation with the periodic inventory system, please remember the account that will be affected now when we are purchasing inventory for the business is purchases. So that account will increase when we're buying, or it will decrease when the owner is taking goods out of the business for his own personal use, which we know is known as drawings. So very important, purchases is an expense and you know what impact that has on owner's equity, right? What expenses does to owner's equity. And then when sales are made, very important, no adjustment is made to inventory or cost of sales. So we will only have one double entry in our accounting equation. Okay, so you need to remember the difference between that. With perpetual, we had two double entries, so four accounts were impacted. But now with the periodic, when a sale is made either for cash or credit, no adjustment to inventory because we only calculate in cost of sales at the end of the financial year. And any other expenses relating to the buying of stock goes to an expense account like freight, carriage on purchases, etc. So let's look at this example again. Please study your accounting equation for the periodic. We purchase goods on credit. Again, remember those four steps. I'm sure I've shared it to you in the earlier masterclass. Okay, first, identify um, the two main accounts. So we know we are purchasing goods and we're purchasing them on credit from XYZ traders and the amount is 20,000. So identify your two accounts. So clearly you know it's purchases and creditors control. All right. Step number two, now, where do we classify according to the chart of accounts? What is purchases? What is creditors control? And we know that, okay? We know that purchases is an expense. So what does expenses do? It decreases our owner's equity. And according to the chart of accounts, creditors control is a liability. So what is happening to our liabilities? It is increasing. And very important to know is that the accounting equation must always balance. Okay? Right? So it means assets must equal owner's equity plus liabilities, or your left-hand side must equal your right-hand side. Okay, so minus 20,000 plus 20,000 will give you a zero, so the equation is in balance. Everybody happy with that? And then the next transaction, sold goods for cash. Sold goods for cash. Okay, so again, the minute we see sold goods, we know that has to do with sales. Cash Bank. Where is the money going to? Right into the bank account of the business. Okay, so there's our double entry: debit the bank, credit sales. Okay, again, now you classify it. What is bank according to the chart of accounts? Bank is an asset, so that is where we're going to record it. And we know that bank is increasing, so it's a plus. And sales, according to the chart of accounts, is an income. And what does income do to the owner's equity? It increases owner's equity. Okay, again, the equation is in balance, or your left-hand side equal your right-hand side. And take note here, no cost of sales entry. Okay, please do remember, I've only shared 2 examples, but you must be able to do other transactions also related to the periodic, for example, drawings of trading inventory, cash purchases of trading inventory. Okay, so please just remember that. Right, so instead of if, for example, the business purchase trading inventory for cash, then it will be debit purchases, credit the bank instead of creditors control. Okay, so again, please revise the revision questions at the back of your textbook. And also in Learning Unit 2, we did do the accounting equation. Bev, can you, okay, I'm just quickly going to tell the students, I'm just remembering that activity. I think it was question 2.13. Okay, so please have
Yeah.
a look again at question 2.13 regarding all the possible transactions that would affect a business using the periodic inventory system. Anything you'd like to add here, Bev, before I proceed? That they should
Um,
just,
Yeah, I think it's just important, obviously, to include the signs, even like you said, the plus and the minus,
minus,
because students tend to sometimes forget that. And as you said, always make sure that the assets is equal to the owner's equities plus liabilities. You
liabilities.
can't just have one amount in the accounting equation. It's got to balance. Um, and I think obviously with periodic, comparing periodic to perpetual, remember wherever you've used trading inventory before, when you're doing perpetual, you would just put purchases, except for when you are returning goods, because with the periodic, then it will be purchase returns.
Okay.
Um, I think that's probably just the important bits to note.
Thank you so much. Any other questions are very important in the accounting equation. We need to see the signs, the pluses and the minus. And as Bev has mentioned, that there has to be amounts on either side, okay, on the assets and the owner's equity. We cannot only have an amount that impacts the only owner's equity. There has to be another account. Always remember the double entry. For every debit, there has to be a credit entry. Okay, if everybody's happy and we have no questions, Bev, I'm sure you checking the chats. All the students seem to be happy so far. No questions.
Yeah, there doesn't seem to be anything coming through.
Perfect. Thank you so much. We're going to proceed now to Learning Unit 5, okay, recording credit and sundry transactions. And this is where we're really going to spend a lot of time on. Um, Lots of new transaction subsidiary journals that you had to practice in class. Let's just look at our learning objectives. Once again, you must be able to explain. So here we have some theory questions. Explain the risks, explain why we offer credit, what are the benefits, and then we have all the practical questions. Okay, record, 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 record. Okay, and again, most importantly, we see these are all the journals now. In Learning Unit 4, you were only exposed to cash transactions, and I'm sure you are aware of those subsidiary journals, the cash book receipts, cash book payments, and petty cash. Now we're focusing more specifically on credit transactions. So credit sales, where do we record credit sales in our debtors journal? Okay, what is our source documents? Again, we went into detail with these source documents in Learning Unit 3. Your lectures revised all the different learning units. Okay, all right. Duplicate credit invoices. And when your customers or your debtors are returning the goods, what is the source document? Credit notes, and they go into your debtors allowances journal. Okay, so these are the transactions we will be focusing on. Credit sales, when we're selling to our customers, known as our debtors, and more importantly, when the business needs to purchase inventory for the business on credit. Where are we going to be recording those transactions? In the creditors journal from your original credit invoices. Very important here is to note your source documents, because that will really help you when you now need to decide, where am I going to record these transactions in the exams, and you're given your scenario of a particular business, you really need to know your source documents. Okay. Very There were 13 learning objectives, because again, so much that you need to know here. Right, you need to be able to bring in Learning Unit 3. You need to account for VAT, so you need to remember when to allocate standard rates, zero rated, exempt, or non-allowable. I'm hoping you know that. Be able to do the rules of double entry, especially in our general journal. And then you know the monthly bookkeeping cycle. After the journal, what comes after the journal? What is step number 4 and 5? Who can still remember that monthly bookkeeping cycle? After you've done the journals, you need to step number 4, step number 5, Learning Unit 1. Okay, please always remember the cycle. Okay, after journals, there we go. What does the bookkeeper need to do? Summarize. Okay, the general ledger summarizes the journals, and the trial balance summarizes the general ledger. So always remember that is the process that is followed every month, every month. And then more importantly, you know that you need to now analyze all these different transactions under the accounting equation. More specifically here, in this learning unit, we have to take into account VAT, okay? Input VAT and output VAT, okay? So again, very important to study page 109, okay? You were introduced to this in Learning Unit 4, okay? If you just a reminder that the first three, these are your cash journals, and now these are the transactions that affects the credit transactions, and also the general journal is for those other sundry transactions. Okay, so please just do study this table for short questions as well. Okay, I'm sure you've seen in test 2, you were asked a question based on this table in your textbook. So again, please study it, because again, your source documents, the source documents, all the different source documents that you need to know will be given to you here on this table. Okay, cash book payments, your EFT confirmation slip, your petty cash journal, petty cash voucher, creditor's journal, original credit invoice. Okay. So we need to commence with an activity. Again, please, now you really need to remain focused here. So let's have a look again. Let's just recap. What transactions will we record into our debtors journal? Credit, sales. What goes into our debtors allowance? Those are any returns or rebates on goods. And the source document, duplicate, duplicate invoice, and for the returns, duplicate credit notes. So we're just going to read through this activity. You are the bookkeeper of Meggie Suppliers. As the bookkeeper, you have been provided only with the source documents for the month of May, necessary for the preparation of the journal specified below. I I took a past paper so you could get an idea of more or less how this will appear in your exams. Maybe not in the exact format, but could be similar to this. Okay. But again, this is similar to your activity also in your textbook. Am I right, Beth? I think it's question 5.5. Okay, the
Yeah.
layout of the activity was more or less this 5.7 and 5.5 in your textbook. Okay, so take note the markup. So they will always give you the markup. Okay, right, unless otherwise specified, and that is what you'll see. That there will be in the exams also some transactions where you might have to not use this markup percentage, but the percentage that's given to you for that specific transaction on the date. Okay. Right, so they've given you the source documents. They've told you that DIN stands for duplicate invoices, DCN, duplicate credit notes. And the minute you see that, it should have already rang a bell in your head. Where am I going to record my duplicate invoices, my duplicate credit notes, my duplicate cash slips, my duplicate receipts, and my journal vouchers? Who can tell me where am I going to put duplicate invoices? In which subsidiary journal will that be recorded? It's not an original, it's a duplicate. So in which subsidiary journal will I be recording the duplicate invoices? Any volunteers there? Well done. Yes, Tatum, it's the debtors journal. That's correct. And then duplicate credit notes, duplicate cash slips, duplicate receipts, journal vouchers. So you see how important it is for you to know. If you know the source document, and then you will be able to know this is where I need to go and record these transactions. Okay. Duplicate credit notes, debtors allowance, duplicate cash slips, duplicate receipts, cash book receipts, journal vouchers, general journal. And again, I'll just take you back to page 109 again. This is why we as lecturers stress the importance of you studying this table, because it tells you exactly duplicate credit note, debtors allowance, duplicate credit invoice, debtors journal, journal voucher, general journal, duplicate cash slip, duplicate cash invoices goes to the cash book receipts. Okay, so please, very important for you to study that table on page 109. Okay, so now these are your transactions for May. The first transaction is the owner T. Murphy has contributed capital, an additional capital contribution in cash, and that is your source document. I'm hoping that by now you know where to record that. Where are you going to be recording this transaction? Who's willing to give me an answer there? Where are we going to record the first transaction? Again, your source document can assist you, or just the transaction alone. You know, where do we record capital? Cash book receipts. Well done, Nayanda. That's correct. So that transaction will go to your CB or your cash book receipts. And this is what you need to do. Going into the exam, you can write there, okay, on your question paper. Remember, it's your question paper. You can write on it. So you can say, okay, I must know that this transaction must go to my cash book receipts. Right. And then we have again on the 2nd, on the 8th, on the 12th. We've got quite a few transactions. Again, where are we going to be recording the transaction on the 2nd? Okay, so have a look at them. We will take a break at 10. So in the next 2 minutes, we will continue with this exercise. Very good, Tatum. That's correct. Debtors journal, credit, the word credit sales, and also the source document, The minute you see duplicate invoice, DIN, okay? It tells you that that transaction needs to be recorded in the debtors journal. Okay, right. The one on the 8th, cash sales, and the source document is a duplicate cash sales. Okay, so please, your source documents will help you to know where you need to record these transactions. The one on the 8th, where are we going to put DCS, duplicate cash slips? Anybody else hope that want to? Okay, so we said this one will go to the DJ. Well done, Isha. Yes, right. That will go to cash book receipt, CBR. That's correct. And then we have Wonga, duplicate invoice, credit sales again. Where do we record credit sales? Credit. The minute you see credit, okay, it's 10 o'clock now. Okay, so we will be taking our break in the next few minutes. So just remember credit sales again, DJ. So you write that. Okay, returned. It was returned. DCN, duplicate credit note. So that will be DAJ, right? I'll just do that. And please remember this you can do on your question paper in the exam. Again, credit sales, DIN, duplicate invoice. So again, DJ. DCS, I thought I'll help you along. DCS, we're receiving money for rent income. Again, CBR, whenever we're receiving money, right? And then credit sales, again, credit sales, source document, DIN, duplicate invoice. Okay, so that's again DJ. And then we have a debtor settling their outstanding balance and receiving a 5% discount. Okay, and always remember where there are question marks, it means that you need to do a calculation. You need to calculate what is the final amount or answer that you need to record in the subsidiary journal. So here, with this transaction, we will record an amount in the cash book receipts, And then, of course, that is for the payment. And then for the discount, that will then go to the general journal. Okay. All right. The journal voucher. Can you see? The source document guides you as to where you need to record the transactions in which subsidiary journal. I think we'll take a 5-minute break now. Will 5 minutes be sufficient for you just to stretch your legs before we get going? Bev, what do you think?
I think it should be fun. How's everybody else feeling?
Okay. Seems
Oh,
that
5 minutes. Yeah, thumbs
five
up there.
minutes, just 5 minutes, guys. Thank you so much. Thank you.